As I said earlier, interim results out and your headline earnings per share up some 17%, and that's after the June 2009 full year. Chairman G.T. Ferreira described it as the worst in RMBH's 30-year history. Are we finally putting the worst behind us, in your opinion?
Brandon, we believe so, and if you look at the growth that we had in the 6 months from June onwards, while it doesn't appear to be, well, 17% is very pleasing 6 month on 6 month, but if we look at the 6 months from June to December, that's almost 54% up. So the real invigorating and encouraging part was the growth that we've had since the year end. So the bad year seems to be behind us.
Having a look at the emerging market portfolio and the fact that you managed to extricate yourself without incurring any further losses, 2008 you declared a loss of 249 million rand on that front. Any more pain to be taken, or is that it?
We're completely out of that portfolio. The funds have been remitted into South Africa and it's now something that's behind us.
Peter, in terms of your exposure, you obviously have large stakes in the like of Discovery, which has been a star performer for you in this period, Outsurance and FirstRand. Outsurance and FirstRand being impacted by the tough consumer environment, what are you anticipating in terms of a turnaround in those two holdings?
Look, Outsurance in South Africa is doing very well. If you strip out the Australian startup costs, then Outsurance would have grown its revenues by 15% in South Africa, and its attributable profit would have been up 10% in the 6 months that we're talking about. FirstRand, as the bad debt cycle is reversing and as the portfolios in the merchant bank has moved away from the offshore positions that it has, I think it will grow at a satisfactory pace in the coming 6 months. Having
spoken to Sizwe Ngasana, the CEO of FirstRand, yesterday, certainly the message loud and clear that bad debts in the retail space have peaked, but perhaps in the corporate space we're yet to see a peak in bad debts, and that's only anticipated in 2010 second quarter.
Yes, but one would have to say that there is nothing spectacular or big that's on their watch list. And
so no corporate defaults, in your opinion?
Well, we're saying that we're comfortable that those ones have stood the stresses that we saw in the last 6 months, which was most probably the worst period that they should have been in, and that they should be manageable moving forward.
Having a look at Outsurance and the startup costs that you've referred to in Australia on YOUI, I'm not sure the pronunciation of that startup business. When are you expecting all the capex to yield a return?
We're saying that at the moment the pleasing thing of it is it's actually getting the chance to bid on business in Australia. It's converting the calls that it's getting at a satisfactory rate. It now writes about 30% of the total quotes that we do in the whole group on a daily basis, and it's 20% of the premium income. So we're thinking that in 2012 we should be, according to the business plan, at a break-even situation, and it should move forward on a steady progression until then. It's been doing better than we expected, and we've adjusted the business plan to make it more challenging.
Why would shareholders buy into RMBH rather than going into the direct underlying investments, the likes of a Discovery, the likes of Outsurance and FirstRand?
I think it's a diversification that the portfolio gives you. It's the size of the stakes that are unique. I don't think you can build up or you can invest directly in the size of the stakes. Outsurance at 60%, where you can't invest directly yourself. Discovery 25%, FirstRand 30%. Those stakes must have a value inherently because of the size of the stakes that we have and the ability of the deal flow that comes as a result of being invested in those businesses.
Second half, are you expecting to outdo that 17% increase in headline earnings per share?
I think it will be a similar outcome to what we had in this period, and we're confident that it will progress far better than the previous year.